Hello friends. Today I'm going to talk about the one more interesting strategy which is based on the straddles, that is 1% short straddle system. Among the various straddle strategies, I found this strategy is very unique. I'll talk about what is so unique about this strategy. But before I start, basically just wanted to let you know I found this strategy on one of the website, that is squareoff.in. In the blog, they've mentioned what is 1% short straddle strategy and how it works basically. So if you want, you can go through this web page. Kiruba Karan basically is the founder of this squareoff. Okay, I have no association with squareoff. I'm neither promoting it, but I just wanted to give credit, right, on the source. Okay, so let's talk about 1% short straddle strategy. So many of you must be trading these straddles and its various variations. The one is and I think everyone is aware of nowadays is classic 920 straddle that we initiate at around 9:20 a.m. with per leg SL. Let's say it could be 20%, 25% or 30% per leg SL. The other one is the combined premium based straddle. So basically you track the combined premium. If it is goes below a certain point, then you exit from this straddle. Okay, the other one is the re-entry and dynamic delta neutralizing straddle. Okay, so re-entry, I have already created one video that you can refer. Dynamic delta is basically you convert your straddle to a strangle, keeping the delta of both the legs in check. So you do this dynamically as the spot moves, and you keep on initiating or adjusting your position in the direction of the market movement. Okay, I'll explain and create a video on this also. Okay, and the next one is the momentum based straddle. So basically it's a wait and trade. You basically wait for the premiums to reach at a certain level, then you initiate the strategy. You initiate one leg and then wait for the other legs to initiate. Okay, I'll also create a video on this momentum based straddle. Okay, and we'll show you the entry criteria, exit criteria, and how it works. Okay, the other one is the entry on vwap crossover straddle. So basically what happens, you check the combined premiums and the vwap of that combined premiums, and if the combined premium started trading below the vwap, we initiate the straddle. The other one is the combo straddle. So basically it's a combination of nifty and bank nifty straddle, and we basically put stop loss on the overall combined premium of nifty and bank nifty straddles. Okay, so if it reaches below a certain level, basically it's not a combined premium because it's very difficult to track the combined premium of nifty and bank nifty, but basically on a certain price change level, let's say if your nifty and bank nifty total loss goes below, let's say 1500, then you exit this strategy. Okay, for combo straddle I have already created one video that you can refer to. Okay, the next is the OI change crossover skewed straddle. So basically, as you know, the OI keep changing during the day, and basically in this strategy we keep track of this change in OI, and as soon as the OI crossover happens, let's say if a call OI changes more than the put OI a certain point of time, then we initiate this strategy. Okay, it seems a bit complex, but it's not that complex. I'll create a video on this and will explain how it works. Okay, Now, so why 1% straddle? So as you know, you might be trading the straddles, and you must have seen that in a highly volatile market, if you have a per leg SL on the straddle, and if market goes up, you hit the SL on the call side, and if the market goes down, you hit SL on the put side, and then market remains sideways. So basically, this volatility basically kills your straddle for that day, and you incur the losses. And similarly, if you have a very fixed SL, and if market is volatile, your SL is hit, and then you exit from that strategy. But after the initial volatility, this market may remain sideways, or even if it is volatile, but this volatility is in a certain range, and you don't want to exit out from your legs. So so to handle such kind of a volatility and whipsaws, basically we set our SL based on the underlying volatility. So let's say if the spot moves in certain range, okay, we set our SL based on that range. So we don't have any fixed SL. Our SL is based on the movement of the underlying, the range of that underlying for that day. Okay, so basically this gives enough breathing room for these straddles to work out. If the volatility is stabilize for the rest of the day, and then our straddle may have some profit. So why is spot range based SL? So basically you market trade in a range most of the days on intraday basis. Okay, and this range basically respects the normal distribution. So what is normal distribution range, I'll explain in the subsequent videos. And what have seen basically this range for the index, as of now that I have done some analysis, it's between -1% to +1%. So this is the spot change analysis that I have done for Bank Nifty from 8th November to the 21st March. That is around 91 trading days. Now if you can see, uh, the 65% times market remains within a range greater than 1%, less than +1%, -1% to +1%. Okay, and 20% time it was trended below 1%, and 15% time is more than 1%. So here you can see, okay, from 91 days, 59 days market remains between 1%, and 18 days less than 1%, 14 days greater than 1%. Now this range, basically how it is calculated is, we took the spot value at 9:20, and then we check the spot value at 3 p.m., and then we find out what is the movement during this period. Okay, so as you can see, most of the time market remains between a range. Now this is the spot change percent normal distribution, and you can see this is -1% change, -2% change, +1, +2, and +3% change. And you can see the maximum concentration of this change is around -1 to +1. Yeah, you can see the highest concentration. But as you go to the extreme levels, so let's say -2, -3, you get very less movement, very less number of days where it goes beyond -2 or +2. Okay, okay, now what is the strategy rules? So rules are very simple. You enter at 9:20 a.m. straddle. Okay, initiate ATM call and ATM put. You sell ATM call and ATM put at 9:20 a.m. There is no fixed SL. You don't have any SL at all. But definitely, I mean, you can have a very wide range as well in the system for handling you know, uh, any large movement, unexpected large movement during the day. Okay, and then you exit at 3 p.m. or if the spot range breaks -1% or +1%. So whenever the spot moves, when you initiated this strategy, from that point, if it moves below 1% or above 1%, then you exit this strategy. So whatever may be the profit and loss at that point of time. Okay, now what is the pros of this strategy? Now this strategy is very simple to implement and very simple to follow. There is not much adjustment needed to this strategy, and we exit once the spot breaks a range, let's say 1%. And sometime even if the SL hit on the range break, we might exit with some minor profit. And this usually happens, let's say if market moving is upside and we have a volatility crush, then our both the legs actually are in profit, call and put side, and we basically exit in a profit. Now what is the cons? So the con is basically it's difficult to implement manually, because you have to keep checking the spot movement manually, and this is very difficult, okay, to keep check that manually. And the other one is, if the VIX keeps increasing during the day, then our premiums start swelling, and if we hit the range, basically then we may incur big losses on that day. Okay, now what are the various variations or improvement that we can do to this strategy? So basically what we can do, instead of initiating at 9:20, we can just wait for market to stabilize, and then can initiate this strategy around 9:30 to 10 a.m. uh, Usually what happens during the day, as the day starts, there is huge spikes in the premiums. So we should wait for at least a couple of minutes, and better to initiate this strategy at 9:30. Okay, now the other improvement that we can do is, we do not initiate if the combined premiums of both call and puts are trading above the VWAP of the combined premiums. Basically this is to avoid any premiums spike that generally happens in the first few minutes of the market opening. And as soon as the combined premiums start trading below VWAP, we will initiate this strategy. Now how to track this combined premium and VWAP? There are other online tools available that you can subscribe to. Okay, the other things that we can avoid is to do not trade before or during any major event, let's say on the budget days, because what happens generally, the premiums keeps increasing before the event, and even if our 1% range hit during that day, we may incur big losses because of the premiums start swelling basically. The another improvement that we can do is, basically we can initiate Nifty and Bank Nifty straddle together, because sometimes what happens, the one index behaves more violently, there is more volatile than the other. So let's say Bank Nifty is more volatile, but the Nifty remains in range bound. It happens sometimes, so that we incur losses in one index, but then we make profit in the other. And by this way we keep our drawdowns in check. Okay, the other thing that we can do is to experiment with different percentage for the range break. Let's say we can check like 1%, 1.5%, 0.8%, 0.6%, right? And can see what works best for us. So but remember, with tight range, we see less drawdowns but less profit, and if we have a wide range, so definitely we can expect big drawdowns and the big profits. So You have to backtest and forward test in the live market so that you can find a range that might suit your risk appetite. Okay, now I'll give you a demo uh, in the backtesting engine, in the simulator, basically on these days. So I have chosen these 3 days where the market was it trending in on 7th February, zigzag day on 10th March, and range bound day on 31st December. Okay, just to give you an idea how this strategy performed during the day, what are the, how the MTM swings, based on the movement of the spot. Okay, now this is the chart of Bank Nifty on 7th February, and you can see the market was trending downward, okay, from 9:20 to 3 o'clock. So let's go back to our simulator, 7th February. So I'll choose 7th February, okay, and 9:20. And 7th February 9:20, I can see all the available expiries. So I'll choose 10th February and I'll see the option chain of that day for this expiry. And then I have a couple of ready-made strategies, so I'll just initiate short straddle, give it a name, choose a mock, will execute this in a paper mode, and I'll just execute it. Okay, so as I said, we won't keep any fixed SL. Now you can see the strategy is executed. Now this is the executed price. Okay, and we won't keep any SL. So this requires to have an SL compulsory. So I'll just have a very wide SL at least. Okay, there is no per leg SL, and we'll keep the SL based on the spot. Now when we can select the future based or spot based. I'm selecting spot based. Now you can see the spot price is 763, and this is the range. So 1% downside less than 1%, and 1% upside greater than 1%. So you can see the actual value, the 1% calculated value. So current spot price is 38763, 1% downside is 38376, 1% upside is 39152. Okay, and then we exited 3 o'clock. Okay, let me just schedule this strategy for that day, and then I'll keep moving 1 minute, and then I'll show you how it performs. Okay, so I'll just move this video in the fast forward mode just to show you. Now here you can see the range and the change of the spot range. So this is the spot when actually I executed, and at that point of the spot was 38763. Similarly you can see the same value here. So let me just hide this value, and I can just keep a check on this value. Okay, so what I have done, I have added the futures chart of Bank Nifty just to see the market movement, and I have also added the combined premium chart of this strategy that I have created. So this is the combined premium of call and put, and the red line is the vwap line. So currently it is trending down. Okay, can you see that there is a sudden down movement somewhere around 10:55, 11 o'clock, and we are just about to hit our 1% range. It currently is 0.97% down the moment we started our strategy. Okay, and we are in loss of 1300 rupees, somewhere around 52 points, bank nifty points. Okay, so now you can see we hit the range SL. So nifty is down minus 1.05%. So now you can see the spot range hit at this point of time, and we made a loss of 1,700 rupees, somewhere around 67 points. Okay, uh, let me just move forward, let's say 15 minutes, and see how this market performed after we hit our SL. Now you can see the market went down 1.9%. If I go like 132, 1.12%, 1.20%, 1.38%. Imagine if we just kept this straddle running, we would have incurred huge losses, right? We squared off put side at 652, but now it's 725. And if you can see, let me just show you the vwap of this chart. Okay, let me just add to the analysis mode, and you can see the vwap. Okay, at around 11 vwap started increasing. See the increase in the vwap, basically the increase in the premiums. See, okay, for the 10th March, where market moves in a zigzag manner, it goes up and then goes down. Okay, I'll show you the the simulation in the fast forward mode. Okay, Okay, so this was the back testing result and for 3 days. So as you can see, on the seventh day we had a loss when market was trending on the downside, and on the 10th March market was zigzag, goes up and goes down, but still we were in the profit. Okay, and on the 31st December, for the market was range down. We had morning volatility at around 9:20. Market goes up within few minutes of market opening, and then it remained range bound. We still had profit on 31st December. Okay, so as you can see, it's a very good strategy. Okay, it's not very complex, and we have an SL which is based on the volatility of the underlying. So you don't have to keep SL on per leg basis, and usually if market remains volatile within the range, we most of the cases we end up still in the profit. Okay, but if market is range bound, then definitely we make a good profit. So if you like this video, please subscribe to my channel, and you can share this with your friends, and you can also follow me on Twitter, where I post my views during the market hours. Okay, so that's it. Thanks a lot for watching this video. See you in the next video.